Hello and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by fund analyst for Morningstar, Fatima Kazoo, to talk about commodities. Hi Fatima.
Hi Emma.
So if you told investors a year ago that after the torrid time oil price had, it would halve again over the next year, they probably wouldn't believe you. But it happened. In fact, in general, it was a bad place to be, commodities, energy, oil stocks over the last couple of years, wasn't it?
Yes, it was. Commodity-related investment have undoubtedly been an unloved and challenged area over the last few years. It's certainly understandable that there is a degree of disappointment amongst investors given the sharp decline witnessed over the last 5 years in each of the major commodity subsectors, with energy being the latest one after agriculture in 2013 and base metal in 2011. Oil prices have actually tumbled by almost 75% in the last 18 months as a result of the decision taken by OPEC in November 2014 to switch from a price to a market share strategy. And this downward trend is showing no sign of ending, and Saudi and other players are holding firm on their strategy. But it's not all gloomy. We've seen more recently some areas of the commodity market surging, like gold particularly.
About time too, because gold, of course, is the sort of thing that does well when there's doom and gloom about. And there's been doom and gloom about for quite some time from China, from the Middle East. And it seemed to take investors a while to sort of do that flight to safety, which they have done in the past. But finally they're here and gold has gone up in the past week, hasn't it?
Yes, it has. Finally, as you said, it tends to work well in when there is a lot of economic concern. And last year, even during the Greek crisis, that hasn't been the case. And so far this year, gold equities have enjoyed a strong rally on the back of economic growth concern, but also weaker dollar, which tends to help in this space.
If investors are feeling bold, if they think they can call the bottom of the energy market, there is a fund which they should consider, shouldn't they, for a niche part of their portfolio?
There is one which is Guinness Global Energy, which we rate here at Morningstar Silver. And it's run by an outstanding team of 3 managers, Will Riley, Jonathan Wagan, and the highly experienced Tim Guinness, who has more than 3 decades of industry experience. The long-term track record here is strong. Last year has been weaker given the environment, and the key here in the space, but across all the commodity complex, is a focus on quality, on company with strong balance sheet, and in terms of energy, companies that are able to survive in this low oil price environment, but also eventually able to capture the upside.
When it comes.
When it comes. It will one day.
And what about investors that want a slightly broader basket approach?
One that is representative of the entire commodity complex, including energy, is the First State Global Resources. Here again, the fund is run by a well-resourced team of high-caliber individuals led by a highly experienced manager, Joanne Warner. And the broad investment approach has been consistent since the fund was launched, and the results over time have been also solid. In our view, this is a quality way to invest in the resources space.
Of course, it is worth mentioning, I said the word niche earlier. These are, of course, only for investors who have a well-diversified portfolio already. And this is a satellite player. This is not for the core of your portfolio, is it?
Yeah, we always emphasize that this type of funds should only form a small part of the overall portfolio of an investor.
Fatima, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.